So overall, during the month of December, was it increasing risk exposure or decreasing it from your clients?
Well, it was increasing risk exposure, no doubt about it. But it's not crazy. It's not I have to be involved. Their exposure went up about a little bit over 7.25% overall. And so with that, they were buying stocks. They were buying ETF funds. They were buying mutual funds and ETFs that were more general, as well as fixed income still. I think the important point is people are like, oh, retail's running in or running out. As you know, they've been kind of a little, I'll say, nervous or sedated in their move all of this year. So to see them come back to more exposure, but still continuing to buy fixed income, tells me that people are not running into this rally by any stretch of the imagination. Couple of interesting things on it. First of all, if I look at the sell side of what our clients did last month, they started with stocks that had one thing in common primarily, and that was 52-week highs. You look at things like Citigroup was one of the stocks that they sold last month. They sold Facebook. They sold Alibaba. Then they sold Netflix, which was at its highest level since July. Then turn around and look at the buys, and the top buy for 9 months in a row, our clients have been buyers of Disney. So I don't know if the sale of Netflix, when it gets higher, but the buying of Disney is actually telling us something maybe about the streaming wars also.
What really got my attention is that all year long, the resiliency of Boeing, the fact that your clients have been buying into Boeing despite all of the headwinds and all of the added angst we're seeing in that name.
And I think sometimes people forget Boeing was up 1% on the year. It doesn't sound amazing in the year that we had, but the fact that Boeing was up with all the headwinds they faced was pretty amazing. I think one of the other things, I know you guys are always curious about our millennial clients, and they acted like old people last month. And what I mean by that is 2 of their top buys last month, not top buys necessarily by our overall population, ExxonMobil and AT&T. So people are curious as to why that would be.
Yeah, why Exxon?
And they were buyers of Uber, which maybe makes sense. But Exxon and AT&T, I think, comes down to the fact that they're not maybe as interested in buying fixed income, but here's a synthetic way to play a high yield and more blue chip stock for them to still be involved in the market. And I think there's some nervousness that they may lose principal in fixed income, where at least with the stock, they feel like they may have some more upside with what's going on in the market this year.
Bob, going back to the headline in terms of no real profit taking despite the market run last year, is that a fair position in your eyes?
Oh, absolutely. I think while it's not, as JJ said, real aggressive, TINA and FOMO are still alive and well. There is no alternative and fear of missing out. They're mantras that keep people just investing along the way. An up day, oh, I better go get some. A down day, here's my chance, and they just keep investing.
And what do you think about the aspect of buying a bit of the older media, selling the Netflix, similarly going into some of these energy names, the unloved names, as it were?
Yeah, I think it's trying to say I'm not going to chase them. I'm going to try to bottom fish. I think for a lot of millennial investors, it may be their first time. So let me go after something that's a little more conservative that I heard my parents talking about. Telephone, Exxon, safe, quote unquote, and maybe they'll couple that with some high-flying software stock.
It is interesting, though, JJ, to see that millennials net sold Tesla as we see that name continue to climb to fresh highs.
Well, and if you look, as we've reported every month, if you look earlier this year, there were buyers of Tesla.
Yeah.
So I'm actually happy to see that, people are taking profits. And to your point about taking profits, one of the interesting things for the entire year was Apple was sold most months. It was the #1 sold stock. And people look at that and say, oh, my God, retail missed out. Well, it's still the #1 held stock at our firm. So to see people taking profits on the way up, as Bob knows, having been in the business a long time, taking some profits is not a bad thing along the way. Too often people they've been too much all in or all out rather than partial in and partial out.